Hello, I'm Dennis McCuistion, and on this program, we're going to talk about the history of economics and the financial system, the current state of economic freedom all around the globe, the relationship between free markets and regulations, and whether you or your children could even consider careers in finance or economics. And to provide unique perspectives on these issues, I'm delighted to welcome back Mark Skousen. He's a renowned economist, investment advisor, and prolific author with over 25 books to his credit. You may read his work in Forbes, the Wall Street Journal, among other places. Mark is also the founder of something called FreedomFest, an annual conference that brings together thousands of intellectuals, entrepreneurs, and policy advocates to discuss liberty. Mark, welcome back to the program.
Glad to be here.
You are a legend in my mind, if not your own, I'm not sure, but nevertheless, I want to take you and that viewer back to sort of what we call the history of economics. And it hasn't been something that's been around for long, but at least maybe about as long as the Republic has been here. So give us your idea about where it sort of started and something about that time.
Well, it's interesting that you bring this up because this is an area that has been largely ignored in the last generation or two in economics. They used to have a history of economic thought course in every university department of economics. Now hardly any, and certainly the Ivy League schools, they never teach it.
Wow.
It's only in the small liberal arts colleges like Chapman University, where I am, where we teach history of thought.
Right.
And I was really, when I was at Columbia University, I said, listen, why don't you have a course on crises, history of financial crises, for example. And Glenn Hubbard and others said, oh no, we don't need that. We just need to teach how finance works today, how Wall Street works today. That's all that matters. Well, then 2008 hit. And I noticed, I looked at the catalog, and Columbia University now has a course on financial crises and what happened in the past. Because you can learn from history a lot about economics. So I wrote a book called The Making of Modern Economics, and it's meant to be an alternative to Heilbroner's famous book, The Worldly Philosophers. It's sold several million copies. Of course, it has the greatest title ever for the history of economics, The Worldly Philosophers. I'd like to steal that. So mine's a not very memorable title, The Making of Modern Economics. But it is a story. I created a story in economics. And so to have a story, you have to have a plot. You have to have a hero. You have to have enemies. I have all of that in my Making of Modern Economics.
Well, give them to us.
Yes, so the hero is Adam Smith, the founder of modern economics, and he created the system of natural liberty. That's what he called his model. And his model basically said, under the support of law of justice and a robust competitive model, you maximize freedom within those two rules, maximum freedom. And that's kind of a laissez-faire view of give people as maximum freedom that you can within the rule of law and robust competition. So that was a revolution because at the time there was government intervention at all levels. The government even told you what your occupation was. They told you where you lived and whether you could move and go to another city.
Let me stop you right there for a second because I want you to tag onto that. But I happened to be at Edinburgh last year, about this time of year. And I'd been there before, and I went down the Royal Mile and I took a picture of Adam Smith's grave, or this big thing, you've seen it. And then, of course, his statue is on the Royal Mile itself. I took a picture of that, but somebody had put one of those orange things that you put by the road on top of his head, on top of that statue. I tell you for sure.
And they left it there.
Exactly. So he sort of looked like a dunce, but I think it's the guy who put it on there who's a dunce, and that's just tragic. But he's there. And that sort of happened about the same time America came into play. So sort of tie all that stuff together for us.
Well, that's what's interesting because The Wealth of Nations, his magnum opus, was published in 1776, in March of 1776. So
you see my Declaration of Independence tie here?
Indeed, the 250th anniversary of our country is coming up, and it's also the 250th anniversary of the Wealth of Nations.
Correct.
In that book, and I found on page 563 or something like that, in the middle of nowhere is a simple one-paragraph description of his system of natural liberty, where he introduces the legal system and robust competition and maximum freedom, those three great principles of his system of natural liberty. So he develops this book in a 1,000-page book, which I've read cover to cover.
I have it, but I haven't read it all.
Yeah, and most people haven't. And I felt it obligatory. If I'm going to make him the hero, I better read his book.
Absolutely.
And when it was through, I said, wow, this is a powerful polemic in favor of economic freedom. And the Economic Freedom Index today is actually a reflection of the system of natural liberty that Adam Smith developed and demonstrated that countries that have greater economic freedom, the Adam Smith model, have higher standards of living, have higher economic growth rates. But in my history of thought, then I have the supporters and then the critics, and they often attack and try to discredit the system of natural liberty that Adam Smith developed. And these are the Marxists, these are the Keynesians, these are the socialists, these are the communists, and they tried to tear down the Adam Smith model and replace it with what they considered a better model. Sometimes left for dead, but resuscitated by the French laissez-faire school, by the Chicago School of Economics, by the Austrian School of Economics, by the supply-siders. And in true form, I have a good ending to my story. And the story is the collapse of the Berlin Wall and the collapse of the Soviet central modeling system. Right. Basically said the Adam Smith model has won. And even today, despite setbacks from time to time, the world is still largely pro-capitalist now, and people's standards of living are improving. There's still a lot of threats out there, for sure. But it's nice to see that capitalism, it's hard to kill capitalism.
Well, that's probably absolutely right. But a couple of things. First, you'll recall that I did 3 programs with Dick Armey recently, former House Majority Leader Dick Armey, an economist himself, and he called your book, what, the best book he's ever read on economics or something like that.
Dennis, I have to tell you that story because I gave him a copy of the first edition when it came out in 2000 or 2001. Uh-huh. It sat on the shelf for 21 years, and I just got a letter from him saying, I finally picked up your book 21 years later, and it is the best history of economics I have ever read.
There you go.
So I quoted that in my newsletter, and I sold a bunch of more copies.
Oh, good.
It's in its 4th edition,
right.
Published by Routledge, which is a well-known British publisher that used to publish Hayek's and other publishers. So I feel this is really good, that maybe the history of economics is coming back. And I'll give you my best quote from Milton Friedman. He said, all histories of economics are BS before Skousen. I thought that was a pretty nice quote.
That is a pretty nice quote.
So it's been translated in many languages, and I'm just pleased with the fact that I was able to create this unique history of thought with the hero and the plot and the enemies and the whole thing.
Well, you have you've made available through FreedomFest and your writings, other things, the people to not just read sort of what you write, but what a lot of people write, to look at different perspectives on things, and then to try to figure out which one wins in the marketplace of ideas,
right?
Which I think is extremely important. In fact, you had a guy here at FreedomFest a few years ago that I met from Australia.
Stephen Cates?
Stephen Cates.
Yeah.
I interviewed him at the time, and he lays Keynes out. I mean, the best I've ever seen.
Well, here's his critique of Keynes's attack on Say's law.
Say's law, right.
Supply creates demand, and that the supply side of the economy is more important than the demand side.
Right.
What's the supply side? Technology, capital investment, innovation, savings, productive savings, capital formation.
Right.
I mean, capitalism is the right term, even though it was created by Marx, is the right term to describe the free market, because without capital, you can't have progress. You have to save and invest. You can't just consume. If you consume everything, you're just spending money on products that have already been made. Well, what about the new products? How do you create new products? You have to have saving and investment, and R&D investment.
Yeah.
And the only way you can do that is by saving and investing.
Yeah. Well, you mentioned that sort of the ending, that things are great. It sort of seemed like you were saying after the Berlin Wall and these things, it was the end of history, to quote Fukuyama, I guess.
Yeah.
But, you know, it seems to me, I mean, we've been doing several programs on the rise of authoritarianism, and we've got China, we've got Russia, we've got
capitalism,
all these things. I mean, make me feel better about where we are.
Yeah, and it ebbs and flows. It wasn't the end of history, because there are authoritarian regimes, there are setbacks. The Economic Freedom Index is a really good example. So while the United States has seen a decline in
I was going to say that's numbers going down for the United States.
But the World Economic Index is actually continued to rise into the 21st century until COVID. When COVID hit in 2020, now world economic freedom is kind of flattening out, if not declining, but only a little bit. Overall, there are many countries, and look what's happening into Argentina with Milei. That's a reversal of this authoritarian trend. So not everyone is going down the road of Venezuela, the road to serfdom.
Well,
and that's a great tragedy, by the way, because that's a much bigger country than Cuba,
right?
And of course has the world's largest oil reserves. And it's a great tragedy, no doubt about it. But whenever you have one of those, you also have these optimistic things that are going on, and we're hoping that will capture the spirit of throughout Latin America, and we'll have a reversal of it. But the jury's still out, no question.
The jury is still out, and some of the things that we've talked about in other programs, Mark, is something you know very well, especially all the time you spent with students in your life and still do, and that is the old adage that we have to continue to talk about and teach and make the argument for freedom and liberty and free markets all the time, because it can go away so easily, can it not?
Well, Ronald Reagan said that we're always just one generation away toward totalitarian despotism. And I am concerned about executive orders by our new president. It's one-man rule, and I think he's excessively using his authority, and I think he's going to be slapped down by the Supreme Court. Because it's Congress's responsibility to impose tariffs. And we've had this long history of globalization. That's very much integral to the Adam Smith model.
Yes,
free trade. He was the biggest advocate of free trade, and he was very successful. And the entire 20th century is you see declining tariff rates. We're almost a world's free trade zone, and suddenly it's reversed itself.
Well, that suddenly happened just before the Great Depression. So I want you to tell that viewer something about Mr. Smoot and Mr. Hawley and what resulted from that little action in 1930.
Yeah, it's interesting because I was discussing this with Art Laffer, and Art has written this book called Taxes Have Consequences. And it actually won the Leonard E. Read Book Award this year at FreedomFest. Read this book kind of thing. He makes the argument that it was more a fiscal policy of higher tax rates that was imposed by Herbert Hoover, as well as the Smoot-Hawley tariff, which he signed into law, which increased tariffs. So he said the tax increases is what caused the Great Depression. I think he's ignoring all the deflationary monetary
side
policy
with
that Milton Friedman emphasized.
Right.
No doubt it was both factors played their role, but he's in very support of Trump because he thinks the end result would be lower barriers across the board. Again, the jury is still out on that.
We hope he's right.
Yeah.
But I do recall that a couple of the folks you had here had a big debate in 2007 whether there would be a crash in 2008, and Laffer was on the wrong side and Peter Schiff was on the right side of that debate. And speaking of that, by the way, of economic events, in 2007, I attended a FreedomFest conference in Vegas and interviewed a guy who since died, Fred Folberry. You remember Fred Folberry, the economist?
Yeah.
He's a Georgian. I don't even know all that.
Henry Georgian. Yeah, right.
Anyway, so I interviewed him in July of 2007. And then we did a television program in October of 2007 in which I played some of that interview in which he said, Dennis, it's all going to hit the fan next year in 2008. And I had some other people on, other economists and other stuff. A couple of them said yes, a couple of them said no. Well, he nailed it in 2008. Now here's the question though. Unfortunately, he's died. I tried to contact him a couple of years ago.
He did.
Because he did all that study about the Fed and whether it's about an 18-year cycle when the Fed lowered the rates, get a malinvestment, then you start doing all this stuff, then it works its way.
That's more of an Austrian theory, but
that's
yes.
Right. Yeah. So next year is 18 years. Talk to me.
Well, we should go back in history there because the Georgians did have that right, mainly because it was they focused on real estate.
Right.
And real estate was over leveraged.
Right.
The mortgage securities were sold worldwide.
Right.
And it all collapsed and brought down the whole financial system.
Sure.
And only recovered because it could have gone into another Great Depression if it wasn't for Fed intervention and TARP and all of that stuff. But we loaded ourselves with a lot of debt as a result. So we're still not out of the woods, in my opinion. Mistakes can be made. So I'm telling people to be well diversified, protect yourself, and that includes investing in hedges like gold and silver, more than Bitcoin, frankly. I think Bitcoin's a speculation, but gold and silver are the place to be in that respect. Treasuries are not a hedge. You'll notice when there's a crisis, interest rates are rising. People are dumping treasuries and they're buying gold. But I also think you need, I think our electric grid is threatened. What if electric systems break down?
You sound like David Tice now.
Well, David Tice has a good point.
Yes, he does.
We're out of date on our infrastructure.
Yes, we are.
And we also have terrorist attacks on our grid. So that's a good argument for picking a little bit of survivalism of buying goods and products and services and tools and equipment and be prepared.
I agree with you. I live in France now, as you know.
Yes.
And so last month, the whole country of Spain and Portugal shut down.
Yeah.
Their grid just shut down. And a lot of people say it was this, it was that. A lot of people say
it still happened.
Exactly. A lot of people say it was because they relied too much on renewables.
Well, and that's probably true.
Yeah, but you could have the thing that scares the heck out of me is an EMP, an electromagnetic pulse that some other country could impose upon this one or whatever, and the effects would be devastating. So that's got to be something we have to think about. Now, I was mentioning being in Scotland and Edinburgh last year.
Yeah.
Are you familiar with the Library of Mistakes?
Yes, I visited that.
I did too. Yeah. I did too, and they've got a program coming up later this month, which will be too late for anybody watching this program. But they put on some of the darndest program about the history of economics, and particularly in inflation. Of course, a lot of the stuff they put on is what happened in the UK and other places, but that's where it all sort of started, as you mentioned before. And by the way, which reminds me, we often talk about The Wealth of Nations and Adam Smith, but he wrote another book, which I also never did read, but The Theory of Moral Sentiments, I think it was called. So talk to that viewer about why the concepts he mentioned in there are also important.
Well, I want to go back to the Library of Mistakes because when I saw that and I met the person who created it, I said, you need add a few more books in there. One is called the Coming Deflation. Of course, we're still waiting for the coming deflation.
Right.
And there's Howard Ruff's book, How to Prosper During the Coming Bad Years, came out in 1980 when Ronald Reagan was elected, and of course then you had the good years. So there's lots of those examples. I have a whole collection of doom and gloom books which have proven to be wrong.
Well, I interviewed Ravi Batra back in the early 90s.
Depression of
the Great Depression of 1990.
Yes, exactly.
You know, I mean, I took a course under him.
You did?
Oh, I did. It was an informal course after I'd already graduated, but the fact that an economist like that could be at SMU, my alma mater, is scary. But anyway, it was called the Collapse of Communism and Capitalism. It was a 6-week course, and the first 3 weeks were kind of interesting, the history. And then he said, the 4th week, he said, and here's the way we solve that problem. We redistribute the income. We take the wealth, these people, I held up my hand. I said, are you serious? And he said, well, yeah, I'm serious. I said, well, then what happens in a few years because the people who are smarter will end up with more wealth than some of the other people? Then we'll redistribute it again, is what he said. Yeah. Oh my God. And to think that this guy is teaching economics on my alma mater, it just blows me away, Mark.
The other person I get a kick out of is Robert Kiyosaki of Rich Dad, Poor Dad. If anybody's going to be a bull on the market and bullish, it has to be a real estate investor, which he is. But he's written this book called Rich Dad Prophecy, and the Rich Dad Prophecy is that we're going to have a collapse that's unprecedented, worse than the Great Depression. And he wrote the first book in 2002 or something like that, and he's updated like 3 or 4 times and pushing forward this terrible collapse in the economy. And we need to add that book also to the library of mistakes. Yeah. But now getting back to Adam Smith's other book, The Theory of Moral Sentiments, there's always been this tension between self-interest and public interest, sympathy, if you will. So Adam Smith writes this Theory of Moral Sentiments and says, well, you know, we all have sympathy toward our fellow man. And if a serious calamity occurs and somebody dies in the family, we always feel bad about that and so forth. So we have this sympathy argument. And then when you get to the Wealth of Nations, it's all about self-interest. Well, there's a theory as to why one book was public interest and sympathy, and that was because he was writing about an era where you all lived in one community and you knew each other. Well, if you know everybody and nobody's a stranger, you're doing favors to people because they're friends.
Trust people,
they're relatives.
Exactly.
Blood is thicker than water.
Right.
So you're very much into sympathy as a cause of behavior. But when you're in the big city, you're a stranger.
Right.
So it's all about self-interest.
Right.
And so that changed. And so the Wealth of Nations is a modern, up-to-date, what's happening in the commercial society. And it's much more relevant.
Well, it is. And his idea, the invisible hand of the marketplace, the visible foot of the marketplace. And Dick Armey then took that, he was talking about the government, and he said the government has, let me see if I can get this right, the visible hand and the invisible foot that kicks you out. You don't know if it was government that kicked you out. so just in the short time we have left, 2 things. First of all, talk to us about regulation and its part and plays in all this market. And then secondly, sort of finish with whether that person watching this program, let's say they or their kids or whatever, should try to find a place to work in the finance or accounting, I should say finance or economic marketplace, given where we are right now.
Yeah, so I do think that we do need to look at, I teach economics at Chapman University, and it's very important to teach sound economics to young people, and also a lot of it depends on what their occupation is. Now, for example, I have a textbook called Economic Logic, and I wrote this textbook after having real-world experience. Most academic textbooks are written by people who have never run a business.
Right.
And so I was at the AEA meetings, the American Economic Association meetings, and this guy had written a book called Real World Economics. So I went up to him and I said, so real world, so where do you discuss the P&L statement? He said, what's that? He didn't know what a profit and loss statement was. And I said,
oh my God.
You have a serious problem.
That should have been called Unreal World.
You need a second edition pretty quickly. But in economic logic, I am actually the only economist who's written a textbook which starts with the P&L statement.
Really? Wow.
So accountants love my book. Business people love my book because profit and loss is real. Supply and demand curves, on a supply and demand curve, you only have one price in the real world.
Right.
So where's the supply and demand curve? It's a theory. It's just a model.
Right.
And it's a useful model.
Right,
I introduce it in chapter 6 of my textbook, but I start with the P&L statement.
Good for you.
And it's really helpful. So I tell my students, I said, if you want to be guaranteed a job, there are certain areas you can go into. Accounting, business, finance, those are all great real world experience.
Right.
But also engineering and medicine.
Right.
Those are the two big areas. But unfortunately, there's another 6th area that is guaranteed a job, and unfortunately it's HR, and that gets to the whole issue of bureaucracy and threats of lawsuits and the regulatory environment that you suggest I talk about. Adam Smith goes into quite a bit of detail. Mercantilism was basically the government constantly intervening in your life and telling you what you could do and what you can't do. And he was for shutting that down and reducing dramatically and keeping it very simple, the rules of justice, the rules of the game. And so that's all, it's all in Adam Smith in that sense.
Well, there's no question. And I think that it might be easy to say that we have more regulation than we probably need. And yet, you know, you've got a bureaucracy up there, and there was an attempt to cut back on some of this bureaucracy recently, as you know.
Right.
I think the attempt has basically been a failure. I may be wrong. I mean, I'm, be hopeful, but I'm like you. I'm hopeful about the future. I'm probably a little more negative than you because I'm concerned about the big deal, and we don't have time to talk about it. But I'll say the big kahuna, which is a $37 trillion debt hanging over America, not to mention the unfunded liabilities. So
I've written a new book, by the way, called The Greatest American, and it's the story of Benjamin Franklin and his application to today.
Okay, well, I want to read that book, but right now we're out of time, so
Okay.
thank you so much for doing that. And thank you for joining us. You know, Mark is connected around the world with top economic thinkers and leaders who are changing the world for the better. And I thank you for watching. I hope you'll follow us on social media and stay up to date on these issues because, as always, we're talking about things that matter with people who care.